Okay, good afternoon everybody and welcome to Ask the Experts. Pretty simple stuff here. It's all about getting your portfolio questions answered. It could be stocks, it could be crypto, it could be commodities, it could be indices. Keep it broad, keep it interesting, keep it general. I've got a few questions already queued up. Let's get to them right now. First one from Craig is Pilbara Minerals, PLS, the big lithium producer. Let's head over to the charts. Just pure coincidence, everybody, that Magnus Energy Technologies was on my screen. It was the one I was looking at before we started. I'm sure it'll come up at some stage today. Did you buy the dip? Question mark, question mark. Let's head over to PLS, another one in that sort of battery space. Obviously providing lithium, and Magnus is the one that's going to make the batteries out of the lithium. I was going to delete all the studies. Let's start fresh. Why not? You can see some scratchings there from last time. And we're probably talking about supply. Probably should have left them. But we're talking about supply and points of supply. So this is obviously what we call a big POS, point of supply. We don't know it's going to be a point of supply when it happens. There wasn't a lot of indication that it would have been that. There is some indication because we can see the shadow, the upper shadow on the candle here, and that is a candle from the 15th of September if you're onshore. Made a high of 253. Okay, so it started here at 240, made a high of 253, had a low of 239, closed at 245. So some indication that supply was coming into the market. Why at that level? Why at this level? Well, to be fair, 250 is a pretty big round number. It's not the biggest of them out there, but there is a little bit of a round numberish going on here at 250. So potentially some people who may have bought lower down at $2, they're thinking 250 is a good level, maybe at $1. We often find that we get doubles in markets in technical analysis. So if we have some sort of consolidation, I would suggest in and around, I was going to say 125, and it's not far off, to be fair, is it? You could probably maybe move that box a little bit lower and massage it. But generally, if you get a decent period of consolidation around a particular level, double that level is often where the next period of consolidation comes in. That's because it's very natural for people to want to sell after they've doubled their money, regardless of how good this stock is. Now, of course, if the stock is very, very good, people will still be buying. They don't care about if it's doubled. They think it's going to quadruple and more. So the supply does meet some demand through here, and eventually we mop up all this supply and hopefully we get through. The point is, number one, you have these areas where you have natural supply. Number two, how do we determine if they are supply? We should see signs in the market that look, a bit like that candle and a bit like that candle, that supply is coming in at that level. So we're starting to be able to read the candles to tell us that these levels are actually supply or demand. Here's a little tip, a little trading tip. Quite often we have a first test of the point of supply that fails because we're bumping up against all of that supply that's in the market. We remove some of that supply and then it's easier to get through on the second, it could be the third test, etc. So second tests and beyond tend to be more successful, have a higher probability of succeeding than first tests. Okay, which means that Pilbara is looking very, very good today. The short-term trend is up. The long-term trend is up. The candles, I like these. I really like yesterday's candle. Today's candle is a little bit of an unknown because it is still a live candle, and if we are really strictly following my rules, we shouldn't even consider it. We shouldn't even know it's there. Hey, we do know it's there, of course, and we'll get an update in about 13 minutes on how it's going because I get hourly updates on this technical analysis platform. Price action back to higher peaks and higher troughs. I wouldn't say it's the cleanest price action. I wouldn't say they're the cleanest candles, but there's certainly a great deal to like here. If I had to give this a rating out of 10, I think I'd probably go 8.5 out of 10. It's very strong. So if I had it, I would certainly hold on to it. If I didn't have it, I'd be happy to buy it. Here, ideally, we bought it on yesterday's candle. We bought it actually on the open of today's trading based upon this very, very wonderful candle here, wonderful signal that demand is really starting to get itself organized and that supply has pretty much lost any ability to sort of organize and influence prices around this 250 level. The other quick thing I'll mention is that 250, because it is and has been such a key area of resistance, could in the future end up being quite a key area of support down the track. And may well provide a great basing pattern of which to make higher moves. How high could the move go? Well, often in technical analysis, we do like to measure previous moves and then project them into future moves. So if we take this move here, which is give or take, it says there's 67 cents, give or take, or 30 something percent. We can project that higher. I won't do it because it won't fit, but that could easily take you into sort of the 310 mark. So hopefully for you, Craig, that's a pretty comprehensive assessment of the technicals. Let's see if we have any fundamentals on Pilbara. I suspect, because I do know they are going into production, we'll obviously with that comes some cash flows, that we may well have some broker analysis and broker forecasts on this one, and hopefully an EPS, a positive EPS for the current financial year, which is actually the case, and some of these are still retrieving, so some of them will change, but I'm pretty sure this one's in, and it does say a plus 13 cents EPS for FY22. That's the current financial year. Fairly steady through there though, which is surprising. I would have thought maybe they'd be ramping up production, but it's possible. Again, sorry if I don't know the full story here, but it's possible that they're up to full production, and then they're going to maintain that. Without the earnings growth in there, however, it is going to limit the upside on the valuation, is probably the best way to put it. Let's work out some of these other metrics. High, moderate, low risk. Hey, beauty is in the eye of the beholder. You probably should go moderate, but let's go low. Dynamic F, should we use the forecast? Well, it's hard to say on this one because it's a stock with new earnings. So what is the right PE to assess it against? Now, we could go on peer PE. So in this case, you probably want to look at something like an IGO or a Mineral Resources. It'll take me maybe a bit too long to do that, just in terms of how long it takes to load that up and then come back, but that could be something you could do. Off the top of my head, I would think that if anything, those PEs are lower, then maybe 18.9 could be, in which case the valuation is not very supportive here of higher prices for Pilbara. Hey, don't shout at me. I don't make these numbers up, the brokers do. Okay, average broker target 236, which is a bit below where it is, and just on my model and metrics here, without having a good number here, to be fair, it is tough to say that it's worth much more than it is right now. However, if we said, hey, 40 is great, then the numbers all change, but you would only go 40 if you had fantastic earnings growth in the system, and we're just not seeing flat growth at best, and we can see that on screen. As I said, don't blame me, blame the brokers. The next one is SFR, so that's Sandfire Resources, and this one's for John, and then he's asked for Playside Studios PLY. We'll have a look at that one in a sec. So let's get up the data for Sandfire, and let's head to the chart. That might take a little while. So great technicals on Pilbara, but hard to support it on the fundamental basis. Sandfire, this is an interesting one. Let's get rid of some of these scratchings from one of our last chats. The first thing that strikes me, is this sort of broad double bottom pattern, higher bottoms, some pretty good candles coming in from here. I mean, let's have a look at these candles here. So you can see some nice demand side candles coming in here. We have seen elevated volume associated with each of these lows, and importantly a diminishment in the volume on the second low, so that is good. That is a good sign. So what we've got here is we've got certainly a lot of selling in the system. How do I know there's a lot of selling? Well, the price is going down and there's lots of volume, so there must be lots of selling. I can't see any other conclusion you could draw from it. But volume, don't forget, is buying and selling. You can't get the registration of volume at the ASX unless somebody is also buying some of that selling. So yes, the price is going down on high selling, but also at this point here we hit this level where a huge amount of demand comes into the system. How do I know demand came into the system? Well, because there's lots of volume. How do I know demand started to overwhelm that supply? Well, candles turned white and we shot back up again. Then we had a bit of a pullback. on quite elevated volume again, and then on the second bounce, it seems that there was very little supply left in the market. So this looks like the selling is done. So the selling is done. The demand is still there. How do I know the demand is still there? Well, the candles turned white and it went up. So we've got it appears now. Whoever didn't like it through this period here, whoever was cranky with it through here, I would suggest to you they're out, and what we're left with is demand with a potential vacuum of supply, because we haven't seen it come back in at this stage. So I think the technical picture for Sandfire is actually very, very constructive. We're seeing it now. So watch this as well. So we're seeing it move above the long-term trend. We're seeing it come back to that long-term trend. That long-term trend now acting as support. And very importantly, this candle here, I think that's the key to the most recent price action. That is a very, very strong demand side candle, and then it was followed up again. A little bit wonky today. To be fair, what is a pretty good market for the materials sector. That's a bit annoying. It's annoying and frustrating, more than concerning, I would say, and it probably just indicates maybe that we could get some sort of consolidation, pullback, interaction with that point of supply there, which should act as a point of demand, and also this little point of supply here, which should act as a point of demand. But I would suggest that probably around here would be an opportune point to enter Sandfire on what I think is actually a changing trend, a trend that could switch back to the upside and do quite well, actually, based upon what I can see. So I'm pretty happy with that one, actually. I think if you've got it, I think you would absolutely hold on to it. I think there's enough water has passed under the bridge in terms of concerns to hang on to that. If you didn't have it, I think it looks very interesting to buy. I don't think I'd buy my entire allocation straight away, because I think there's plenty more work to do. Why? Well, because of all of this stuff here. But certainly I could be quite comfortable with maybe adding a third of whatever I intended to put into it. At that level, and if it doesn't turn out, I've only got a third in, and if it does turn out, hey, at least I've got a third in. I can always add to it as my confidence builds that this new uptrend is establishing itself. Let's have a quick look at those fundamentals for Sandfire Resources. We do have plenty of brokers covering this one, which is great. It always gives me more confidence, safety in numbers when lots of brokers are out there looking at it, and they're pretty positive towards it. 4 strong buys, 4 buys, 3 holds, just the one bearish broker there, strong sell. I wonder who that is. And we better fix up some of these other things here, because low risk, high risk, moderate risk. I don't know enough about the business to make a call on that. I think commodity prices will be supportive, but hey, it's a commodity stock, so I think you probably want to go with moderate there, and that just changed the discounting rate. The current P is very low, so this is more consistent with these mining stocks that we're seeing right now, because brokers are generally quite conservative about their earnings prospects going forward, because they believe we're at peak earnings, we're at peak of the commodity price cycle, etc., etc. But I would suggest that, copper prices, and correct me if I'm wrong, this is a copper miner, are looking fairly solid, and I don't think we're going to see a 12% or a 20% decline in copper prices over the next couple of FIs. If anything, they may well just stay steady as a worst case scenario. So why don't we go custom growth on, and then let's go custom growth target 0. So let's not be crazy optimistic here. Let's just say earnings growth is flat, and we use a target PE. Well, sort of pre-COVID, somewhere between 10 and 15 wasn't unreasonable. Brokers are kind of somewhere around about 10 or 11 now. Let's see what this says. So this uses the median of the forecast. 10, not unreasonable. And what if we take into account the fact that this is more of a cyclical business, and we probably should take a really long-term view of it, and therefore take in some of the historical measurements as well. And we go dynamic there, and it's still coming up as 10, which is interesting. I wouldn't have expected that, but I can check it. I can go the median of this is 10. It may well be, because we've got a few below, a few above, and let's trust it. It's unusual. It's concerning that I know my spreadsheet isn't broken. Historical 10.3, yeah, so it's about right. Bottom line is what we're getting here is that with 0% growth, it's probably fairly valued, and we're not that far away from the broker's targets. The broker's very bullish at 673 and buys, but my model is probably saying fairly valued. However, hey, if you want to be really bullish, you could go low risk, and I suspect that we're going to come in more around where the brokers are. So, hey, this demonstrates very clearly that fundamental analysis is a discretionary science, discretionary art, whatever you want to call it. I reckon more discretionary than technical analysis, because either those moving averages are pointing up or they're pointing down. I will leave the assessment of the valuation to you. At least I've given you the alternatives, and I've shown you what the brokers think, and you can make your own decision based upon what we've seen. The next one, let's type it in here. This one is also for John. It's Playside, PLY. It's 1L, thank you. PLY is the ticket code. If you can hear sort of a droning and a moaning in the background, I don't have somebody held hostage here. It's my laptop. It's a bit warm over here today, and the sun's shining, and I have turned the aircon on here, but it doesn't like the heat, and it doesn't like the fact I'm running about 10 applications as well to make this happen. So I've left the fan on, the extra fan, and that's why you're hearing that noise. So apologies for that. Playside, we're getting fairly scant information here. We've only got the one broker covering it, and they have, we do have some historical data. Ignore those. Okay, they're just a throwback, I'd say, from the previous one. It just couldn't load them, and it keeps the old data there. So really the data we need to look at is here. We've got some data for FY21 because it's in the bag. We've got EPS of minus 1.6 cents, growing, if you could say, to just minus 1 cent this year, and then looks like about a break even next year. But I did do my own analysis on this a couple of weeks ago, and I looked at the cash flow statements, and it looks like they were going cash flow positive, which would suggest to me that the broker is overly pessimistic about some of these numbers. And these are not my numbers; these are the broker numbers, and I would say that we may well flick into profit here. It's certainly there based upon how well they're going and the growth that's in the business. So we're probably not going to get a lot of insights from these numbers here, simply because we've only got the one. If it makes you feel better, they are at a strong buy, but their price target is 80 cents. In terms of the technicals look very good. It's not one that has been around for very long, so we're only just starting to get the long-term trend. That's this little bit here, and as it develops, it will no doubt turn to dark green because we are heading up. Short-term trend is very well established. I think I started talking about it. It might have been on this candle here or on this candle here. Then it went into a trading halt. They had some news out, and it did pop a little, and it's come back since then. I think the overall trend is very good. It's very sound. We are seeing the semblance of a reasonable candle today, and I just noticed, having gone 20 past the hour, I can click update from my data provider, and we'll get a more accurate reading on what it's doing right now. Hopefully that shadow down the bottom here starts to grow, and that black body diminishes, and we get an update. There it is, just like magic, because that would indicate to me that demand is coming back in at an area where we really should see it come back in. So where these moving averages are starting to catch up to the price action, where the demand came in really before the announcement. So if they liked it before the announcement, yes, there's going to be some fluff and some bubble in terms of people getting all excited about it. But if they liked it before the announcement was good, then they should like it after the announcement, and they'll continue to buy where they were buying before the announcement. So I'm pretty happy with this one. If you've got it, absolutely hold it. Would I buy it now? I need to see the end of today's candle, really. And if it turns into a white candle, then I think it does actually fall into the buy category, but let's wait and see on that one. So those two there, Sandfire and PLY for John. Next one is for Marco, and he has gone VR1 Vection. Let's have a look at that one. Another small cap stock, which I like. Don't panic. Don't panic, Marco. Don't panic. Let's reset that one. It probably fell off your chair there. It just does that sometimes, the software. It looks very good. A little bit disappointing today, obviously, that we've got the gap up and then the pullback, but hey, that's the sort of market we're in. The other thing that I would point out, and I think it is very relevant, this is a pretty major point of supply here, isn't it? And hopefully your eye is, after watching me drone on, much like my fan here on my computer for so many weeks in Ask the Experts, hopefully your eye is becoming more accustomed to spotting these areas and then understanding what it could mean for the price action going forward. Now, maybe we shall do the test here, the quick checklist. What could we expect coming into this major supply, and what should we at least want to see before we were to add to the position, or if you don't have it, get into the position? Because the short-term trend and long-term trend looks amazing. Tick, 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 candles look great. Price action looks good. It's all very good, but you have to expect some supply and a pause at least at this level. You'd be crazy to think it would just smash through. What do we want to see first? What would we need to wait for to have increased probability of success that we can actually break through this major point of supply? I'll give you a hint. It relates back to the first one we did today, which was PLS, Pilbara. And if I go back to that one, we can see here that we hit this point of supply, major point of supply, and when we push into it, we want to see a first test, and probably then on the second test we'll have a greater probability of success of getting through that. So if we head back to VR1, we are probably approaching here only just the first test. We should expect, I would think, some sideways consolidation, and that would be healthy until we build up enough demand in the system to then have a crack at a second test and then a breakthrough. Okay, so it's a hold for me. Would I run out and buy it today? No, I don't think there's any need to do that. Vection, I can't recall if we have fundamentals on this one. Let's check it out. It's certainly a company that is going to make profits very, very soon. I covered it a couple of weeks ago on Ausbiz, and doesn't look like we have anything there. So it's something you'd have to go. What I do is I go to the company's website. Let me look. It'll take 2 seconds. Let me show you how to do it. So if we go ASX, literally do this. ASX VR1 is probably the quickest way to get it, but you can actually go to the company's website, and then we're looking for the appendix 4Cs. Okay, for these smaller companies. So 4C is the quarterly cash flow report. You're going to get a bunch of other interesting information here. And there's an announcement. See all announcements. And what I like to do is grab the last 4 of these. Sometimes I'll go for more. And there it is there. So that's the one we're after. Okay, so if we right click on that, open a new tab, and you can even search for those if you prefer. Another way to do it, if you happen to run into one of these, the annual report, that's also something else you can grab. But in addition to the annual report, I do like to have a look at the actual cash flow statements, and there's lots of interesting stuff you can read about the company. I do encourage you to do that, but I tend to first scroll down to this bit, because this is where the money is, and what we're looking at here is making sure we do have some receipts from customers. That's great, and by putting the last 4 or 5 or 6, whatever you prefer, to get a trend of these together, we want to see growth in these receipts from customers, and we want to see diminishment in the net cash burned, because that's a minus, or an increase in the net cash received. And this is really, really important for these companies. And when you hear me talk about it on Ausbiz, when I say operating cash flow positive, that's what I'm talking about. And this is the start of getting profits, of course, and then funding your growth, both organic and inorganic, down the track. And this is where the rubber really meets the road. So not cash flow positive yet. If I said it was, then I misspoke. And I think from memory they were on track to do it in the next quarter or 2. The other thing you can do from here, if you get to the annual report, Control F and go Statement of, and click down till you get to the profit and loss statement here. That's always worth looking at, but then I tend to just sort of click down another couple more times until I get to the consolidated statement of cash flows, and then we can see how much cash they are burning there, and we get a comparison to last year as well. Okay, so not just saying specifically for Vection, but certainly for these smaller companies to understand how that cash flow, that operating cash flow is changing, because it's such a key metric for these small companies in particular. Now, we just did Vection. We've got PRL coming up. Let's have a look at that one. Province Resources, which I think looks pretty good, to be fair. And look, there are a few black candles in there, but not inconsistent with these smaller capitalisation, low turnover stocks. But I think there's a great base pattern, and the base pattern I'm referring to is this here. And as long as we sort of stay above that 14-cent zone, I think this one's fine. Would I rush out and buy it now? Look, not right now. No, I think I want to see a white candle or two pop in before I get to that point. If you're in it, stay in it. I think there's every reason to stay on it because the trends look good, and I love the base pattern. And often when we start to make a move up out of that base pattern, it can take a little bit of time, but as long as we're doing it with a little bit of volume, bit of supply removal, then that's pretty good. So I'm pretty happy with that one as a hold. I'm not going to put it in the fundamentals because I doubt we're going to have any. And that's for Marco. Next one is for Hamid. This one is Mineral Resources, and this is quite handy actually because we did talk before about getting a comparison PE for Sandfire Resources. Was it Sandfire? I can't remember. Pilbara Minerals, of course, lithium stocks, and we should get a good comparison here for that one. Unfortunately, not that we will go back and redo that comparison. I don't think we need to. Mineral Resources, let's get rid of some of these bits and bobs here. We talked, I think, in that last discussion, we're talking about how trends change and how you need to be careful. Is this trend changing back to the upside? Maybe. There's some indication here that things are getting better. This is actually a pretty key level here, and the fact that we've done this here, I think, is impressive. So this is a nice move. So this candle here is a strong demand candle, okay, after a breakdown. Very interesting. So you had a well-defined point of demand, right? And this is really interesting. So if you look at this, you've got this point of demand, and no doubt there will be short sellers in the mix here, and for whatever reason they think iron ore prices are going into the toilet. Lithium is a hoax. Lithium price is a hoax, and it's going to come crashing down. And there are short sellers out there. And when you get that, it's just natural as a short seller, much like we like to buy on breakouts of points of supply of resistance. Short sellers like to short on breakdowns of points of demand. And it was a very clear-cut signal, I believe, to short sell here. And if I was a short seller, I'd be looking at that and I'd be saying, I need to sell a bunch of mineral resources. Now, that's not me. I didn't do it. Don't panic. But if I was, that's how I'd be thinking about it. And then we get this next day here, which absolutely booms back up. And I think it puts a lot of these short sellers on the wrong side of the market. And many of them will be waiting for the price to hopefully come back to break even so that they can buy back their stock and get out. You may have, for whatever reason, some people starting to think it's cheap and they're also buying. So that candle there and that candle there are very impressive. The fact that we really didn't come back and take out the low of that candle is also very impressive. I'm liking these candles here as well, here, and even today's candle's actually pretty constructive. It's showing a little bit of a slowing of momentum, but that's okay. I think we have removed a bit of supply there. I think it looks half interesting. It's not one I can come out and with a buy recommendation. If you had it, I think there's enough in it now to hold on to it. We are still going to face some downward pressure from, no doubt, from this zone here. This is going to be the problem. But if we can do this, so if we can do this, this is the price action we need to see now to give us a green light to go again. It's something like that. That would be the key price action. So we're breaking above this zone. We're coming back. We're showing some demand in here with the right candles. So if we saw, this candle occurring in here, that would be magic. And then I think it would actually flick back to a buy. The short-term trend probably would be up by then and actually supporting prices in and around that 45 level. I think it's too early to go now, but I think there's enough in it there to hold with increasing confidence. Let's go back to Mineral Resources on the fundamentals, and the great news is we do have lots of brokers that cover this one, so our data should be quite reliable. We do have 3 strong buys, 2 buys, 2 holds, and the 1 cranky sell there. Brokers have an average price target of 55.44, and that seems very, very high. It's about 32% higher than the current market price, and that's because on the way up, brokers increase their targets because they're generally behind the curve, and then we get, obviously the stock is going up, so they increase the targets. They got all excited, and generally that marks the top, and the prices come down, and then they're stuck with these high targets. That's me being a little bit sarcastic. But I think that is the case here. So you'll probably find some of those targets will come down to adjust to the price so they don't look so crazily bullish. But what are we left with? We're left with a PE ratio of 14.9 for the current financial year. Historically, it's been much higher. Of course, last year, bumper year because of commodity prices. But, the market has paid considerably higher than this in the past. What's the earnings growth looking like? Let's have a look here. So EPS has been amazing. Wow, look at that. $1.77 EPS in FY20 to $5.84. Just incredible. Now, even if they hang on to half of that gain, that's still a fantastic result for them, and it looks like they're going to more than do that. So that's really impressive. Obviously, that minus 52 is coming in there because the iron ore side of things is going to settle down. But there is some growth in the business going forward, probably coming from the fact that iron ore prices, I do believe, will stabilise from February as the Winter Olympics is done and dusted. And Chinese steel producers go back to doing what they do best, which is producing a whole heap of steel, for better or for worse. It's the only way they can make money. I think that's pretty reasonable. I'm happy to go there. I mean, you could go moderate, if you wanted to. I don't think I'm going to use that PE because I don't think that's attractive or realistic. And if we go F, let's see what that comes up with. 13.1. Maybe a bit low. It depends. It all comes down to this now, doesn't it? What you want to put in there. And if we said with some growth, 15, so I'd say somewhere between 15 and 20 is probably the right one. And I know I'm massaging, but it's up to you. It's up to you what you put in. 20 is probably fair, and it gives us a little bit of upside. The bottom line is what we're looking for here is whether we've got some support on the valuation side of things. Next one Hamid is after is SLR. And it looks okay. I mean, we've got the short-term trend re-establishing. The good news is that the long-term trend is no longer impeding prices. So we've had the break of the long-term trend. We've come back, we've tested it, we've held, and then we've pushed off. So that's really neat. Gold has pulled back over the last couple of days. Poor old gold. Thought it looked good, and then now it looks pretty terrible again. And that is part of the problem with this sector, isn't it? And buy, hold, or sell. I don't think you need to sell it. I think you can hold it, but it might give you a few headaches in the short term. It'll all come down to now how we respond here. And today's response is not great. That candle is pretty awful, right? So gap down, tried to rally, heading back down again. Let's see how it goes in here. So I might say, look, just hold for now, and I'll be able to give you a better indication on the charts as to whether you need to just abort the mission on this one, and go do something less painful with your money than investing in gold stocks, perhaps, Hamid. I will give you a fundamental reader on it though, because no doubt it has fundamentals, and no doubt it has a bunch of very nice operating cash flows, because a lot of these gold stocks are just printing money right now. They're lean, they're mean, they're mining like crazy, and gold prices are stuck at pretty, historically pretty high levels, let's face it, and that's helping them out. And you can see some great growth in cash flows over there. I mean, FY21, this is probably a bit of a dip due to COVID, but even if we go back to sort of FY20, it's roughly doubling over the next few years, so that's impressive. PE ratio is 16.2 for the current financial year, which is not that low really, to be fair, so maybe some of this is priced in. Moderate risk with gold. Look, I don't think gold's going down enough to make that moderate. I think if we're talking about iron ore and lithium and copper, there's volatility there, but I think gold's fine. It'll be here or hereabouts, which means that gold miners can just keep making money. In terms of a target PE, what has the market been prepared to pay in the past? Well, considerably higher back there, but then sort of somewhere around 15 is probably right, let's face it. Lo and behold, we get fair value. Who would have thunk it? Okay, that's SLR. Talga for Barry. TLG, another stock I do like. I thought it was going to go there, Barry. I thought we were off to the races, because it did break through that level. But it's just proving to be a bit too stubborn. And I must admit, I haven't looked at it for a few days. I don't like these candles. I don't like how where they happened, and I don't like how they've appeared. I don't like their formation. I don't like they have played out. I just don't like it. I don't like the fact that this hasn't bounced from here either. So that's a little bit concerning. Look at these. I mean, look how consistent these candles are. The upper shadows. So if I zoom in a little bit here. So bull markets are all about buying the dips, and what we saw here really is sell the rally. So sell rally times 2, and that's frustrating. So everything's set up beautifully here from the technicals perspective. Just perfect small pullback, nice white candle. Even that one's there's fine. The only thing that worried me is just distance to the zone, to the value zone. That would have worried me there. But certainly a hold, and then we're off to the races. Bang, we're going to break through. We're going to $3. But no, somebody's come in very, very organised here. This is no accident. They know that the market's bullish for this one, and they know that demand is coming in, and yet they sold into it. And then not much of a reaction there, but still not a great day from the demand side. And then this is the big one here, where demand tried to organise for a third time and supply came in and whacked them down again, and then demand really gave up. And I think a lot of maybe leverage plays, a lot of stop losses going off, and people realising that the wait on this one could be a lot longer than they originally thought. Not great, just awful candles through here, and the demand hasn't come back in. So we've seen this substantial pullback in what should have been a really great developing story, and yet no signs of demand yet. And the risk, the greater, or the increased risk from that idea comes from the fact that we are approaching what should be an area of support down here. But even then, through here, this should have been support. We should have seen support here, and the fact we didn't. In fact, we saw supply in there. That's concerning. Something's going on here. There are organised sellers. There are people in the know. They know more than the rest of us, and they are being very deliberate and very structured and very driven about what they're doing. So what we need to see is demand reorganise itself. If it's going to happen, it'll happen around that 170 level. It'll happen with a candle that looks something like, I'm not seeing the candle I want to see. I mean, I could say it'll look the opposite of that. So if you turn that one upside down, that's what it should look like. Maybe something like that is the candle, or that, there we go, that we need to see occurring in this area here. So until that, I would continue to be concerned. Is it a buy, hold, or sell? And that's tough for me to say. I think there's enough in it to sell some of it. See, so the horse is kind of bolted on that, isn't it? I mean, the enough in it to sell is, well, this isn't working. Looking at that one and going, well, that's not working out. Minus 1/3 here. That's probably the one you want to do. What do we do now? Maybe it's more of a hold than anything else if you haven't done that. So probably just a hold for me on Talga Group. I won't put it in the fundamentals because we're not going to have any cash flows on that one. Solana's coming in now, which I will have to go to TradeView because I must admit I haven't downloaded my data yet. While we've got Bitcoin, we might as well look at it. Fingers crossed it works. There it does. A little bit concerning here for Bitcoin. I haven't looked at this one for a little while. If you follow me on Twitter, I'm focused more on my Avalanche holding. Yeah, that's switched. Isn't a short-term trend switch? Long-term trend is fine. Don't panic. And if anything, we may even see it sort of come back into 52.5 and do a little bit of work in here, and that could wash out enough people actually to make it a really good buy down there, and then probably to the moon by the end of the year. I still think we'll get a good year end for Bitcoin. And if you're a crypto trader, I don't think you're too fussed about my intermediate buy, holds and sells, because you're probably holding forever anyway. But it might give you a little bit more confidence in your conviction there. That was Bitcoin. Let's go to Solana, and that looks fine. It dipped below the zone, but geez, it got back there quick, and it got back there with some nice demand candles, the sort of demand candles that we wanted to see on Talga Group that we didn't see. Not great candle here though, is it? Closed from yesterday. This is today's new candle. Buy, hold, sell, probably again nothing I can tell you is going to change your conviction on Solana if you're a long-term hodler. But I think that there may be a little bit more of a pullback here required, probably back into 200 again. Where we go from there, I don't know. Solana has a habit of proving me wrong and being stronger than I ever thought, and that is a possibility as well. Would I hold it? Absolutely. I don't see any reason to sell it. Would I buy more? Not just yet. Not based upon yesterday's close. I think we need to see a little bit more consolidation, maybe in and around this zone before we got too excited. But overall the trend is wonderful, amazing, wonderful, and there is the ability for that one to go higher. The one that I do like at the moment, but it has had a good run, so probably just needs to cool its heels a little bit, is Avalanche. Yeah, that's fine, but it's going to take a breather here. But I think the ultimate target for this is probably 200 as a logical target. But it could do a Solana, could go even higher. But that's definitely one to watch. Some that I vetted and I like their stories, but they're in various states of of disarray in terms of their charts. But I think keep an eye on them. I think that's pretty good. That's at number 11. One which I was doing this spot for Ausbid Beers a little while ago, and I talked about a bunch of them, and I can prove it to you in my notes. There's one this is the one I left out. Look at that, that's gone berserko. I think Near Protocol, these are ones that have great long-term potential, so keep an eye out for that one. We are at the bottom, one more, Xero, and then we're done, everybody. Let's get that data loading up and let's do the chart in the meantime. This one is for Glenn. Thanks, Glenn. XRO. And long-term uptrend is good, isn't it? It's just can't seem to get itself organised, Xero. And I think, and what we need to see is another firm response in this zone. We need to see a firm response, because I think maybe some investors are going to get a little bit tired of it. Maybe, Glenn, you're getting a bit tired of it as well, because the continuing to threaten this breakout, which could be massive. I mean, we're talking $200 on the next move. Maybe some people are getting a bit bored and a bit tired. Price action moving back into sort of lower peaks and troughs, black candles. It will literally all come down to what happens in this zone here. And with some nice candles coming in, then absolutely hold on to it. I don't want to see us break through this zone. If we start to get into the bottom end of that zone, that starts to concern me. If we start to get below, say, this level here around 131, 132, that would concern me more. But in the meantime, I think there's every reason to hang on to it. It's one of those high-flying tech stocks, let's face it, that everybody tells you is the greatest quality and you should own it, you should hold on to it. But it also comes with a very high PE. 7,400 times FY22 earnings, 800 times previous year's earnings. You are paying a pretty high premium there, but the EPS growth that's coming in is going to be substantial. If you look at this line through here, let me look at that, from 2 cents earnings per share to $1.70 in 4 FYs. Quite extraordinary. And you see these estimates, you go, well, that's crazy, that can't be right. Well, it kind of is right. Which means even with this crazy, absurd PE, if we target a PE as low as 257, these numbers go a bit silly. And look, I don't know if I'm going to get a good valuation out of my spreadsheet for this one, Glenn, because it's kind of a bit mental, let's face it. But hopefully we got a good idea on what to do on the charts. Well, that's the end of the list. It's the end of the session as well, everybody. Thanks for joining me today. I certainly have fun in these, and I really do encourage you to obviously attend them. Hopefully there's something in it for you as well, but also tell your friends to attend. If there's somebody that's getting into the markets that you think will engage with this idea of this mix of technicals and fundamentals, then let them know and tell them all about the upcoming events, which are few and far between, to be fair. We're going into the Christmas break. We'll take a break from that 14th of December one, probably into late January, if not even into February, with these webinars for obvious reasons. But we do have the top 3 ASX lithium stocks for next week. No doubt that is going to be clickbait. I might even throw in some uranium, some rare earths and some hydrogen stocks. Why not? And then ask the experts in 2 weeks from today. And the last one for the year will be how to buy the dip. #BTFD safely. That's where you get them from. Of course, Think Markets, everybody, is a fantastic broker. We are one of the good guys out there, okay? And sometimes that's very hard to find. $8 flat rate trades with Chess sponsorship. We don't aggregate your trades, your holdings with everyone else. You are the ultimate owner of those shares, hands down, no questions asked. You can trade many shares and ETFs, as you can see, with 24/7 customer support and some great people that you can actually speak to if you want to actually talk to somebody instead of chatting away on those chat bots. Okay, world-class trading app, and of course my analysis, not the least. If you like this material because you're watching on YouTube, hit that subscribe button so you will get notified of the next update, or I should say hit the like button to let us know that you do like what we're doing. Otherwise, that's it for me today. It's been a pleasure chatting with you. All the best for your trading until we catch up again. Bye bye for now.